FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You are listening to the Financial Survival Network. It's Kerry Lutz. It is Wednesday. That is a special day of the week. It is Whatever Will We Do Wednesday with Andrew Hoffman. Andy, welcome back.
Well, it's a pleasure to be here, Kerry, as always. I love talking about ugly things.
Well, there certainly is no shortage of ugly things to discuss because the world's just full of them. But if you don't want ugly things to talk about, then I suggest you go and you read the mainstream media, because everything is coming up roses in the mainstream media. The stock market's going up. The wealth effect has kicked in. And hey, never mind the fact, Andy, that 6,000 retail stores are closing within the year because we just don't talk about those things that we don't like, do we?
Well, the wealth effect has kicked in, but only for the 1%. And I say 1% loosely, meaning simply the highest echelon of society that benefits from that free money, whether you're a banker on Wall Street or corporate industrialist who has incentives to get a higher stock price, so you could just borrow for free and do stock buybacks and dividends, et cetera. So, I mean, this is, the housing market. You look around the world and, only in the top end of the market, and that includes here, have you seen any real appreciation? While they talk about a housing bubble, it's really just in the high end of the market where the free money goes. And actually, what's happened in the lower end of the market is, one, prices are no longer affordable because the Fed's money printing has not allowed it to crash as it should have. But also, because of all that free money, you've seen the Blackstones of the world and the venture capitals buy up all of the low end houses as investments and drive up rental rates. So while you have all-time low housing affordability and all-time low, or I should say 30-year low home ownership, you have all-time high rents. And this is exactly what I'm talking about. They talk about deflation, and, you really should read my article yesterday, Deflation and the Soaring Cost of Living. We may be told that there's deflation and that the first quarter we had a lower cost of living, but everywhere you go, prices are going up. I got a letter in the mail yesterday, 17% increase in my property taxes. We talked about the home insurance, nearly tripling in the last 7 years, going up 15% this year. I'm getting ready for my new health insurance renewal in the next 2 months. Can't wait for that. All the fees across the board. It costs $5 to buy a drink on Frontier Airlines right now, et cetera, et cetera. The cost of living is going up, and the money printing is only going to increase as the powers that be tell you that we are having deflation.
Yeah, well, just hope that your health insurance bill, when you receive it, comes with a little bit of lubrication, so it'll make it a little bit more palatable when you receive it. Mine renews January 1st, went from $850 a month to $1,150. Now, I will tell you that I've got a lot of bells and whistles there because, look, I live by myself. I'm in Florida. Don't really have anybody here to help me out if anything goes wrong. And I just feel that having the platinum plan, it's a security thing. I admit it. Could I get by with the gold and probably the silver for 40% less? Probably so. But I just feel that I want that added coverage. So I've made the decision to spend the extra money. And fortunately, I still got a little savings because God knows the radio show is not paying the bill. I'll tell you that much.
Well, look, you can hedonistically adjust all you want, which is exactly what you're talking about, making, quality of life adjustments. So, you could say, well, I'm going to go down to the bronze instead of going up to the platinum because it'll lower my bill. But the fact is that on an apples to apples basis, everything is going up across the board. I was writing the other day about how my mother, she's retired. She lives very, frugally. She's going, well, yeah, groceries, it's not really a big deal. We don't spend that much on them. Yeah, well, on the whole, if you are just the two of you and you're spending frugally, it may not be the tipping factor. But if you have a family that's growing and you don't have a lot of savings, she didn't realize that beef, chicken, eggs, cheese, shrimp, milk, lots of fruits and vegetables are all trading at all-time highs. She just didn't realize it. This is what I was writing about in Deflation and the Soaring Cost of Living. Most people, including extremely intelligent people like my mother, are simply frogs in a pot. And she even cited Paul Krugman. She's still, dying hard New Yorker, reads the Wall Street Journal, not the Wall Street Journal, the New York Times.
Slimes, yeah.
She said, well, yeah, I mean, this guy says, this is my mother, the mother of me, saying that she's citing Paul Krugman and saying it to me like she thinks that she's saying something I don't know. Do you know this guy, Paul Krugman? I mean, this is what I deal with my mother, let alone with what the rest of the world is saying. But the fact is, the average person is doing worse than ever. So when you see a 40-year low in the labor participation rate, a 40-year low in real wages, a 40-year low in home ownership, an all-time high in entitlements, an all-time high in taxes, an all-time high in, the CPI, despite the so-called inflation, you realize that this is the reality of the world. And the powers that be cannot stop that reality, certainly not by printing more money. I mean, my God, look at Europe. Europe reported today its PMI and retail sales data absolutely plummeted. I mean, beyond belief, horrible. They're still at zero GDP growth. They're falling retail sales. And yet, the euro has fallen by what, 30 or 40%? They said that I was going to help them. The yen, right? All time. I mean, this has got to be the worst that the Japanese economy has been in our lifetimes, and getting worse. And the demographics are only going to make it worse, and the debt is only going to make it worse. And yet, this is the 2-year anniversary of Abenomics. Remember, they doubled the money supply in 2 years. It was supposed to be great. They've crushed the yen and raised its inflation for all its imports. They've made it worse for everyone in the country. But has it helped the economy? No, it's the worst it's ever been. In fact, it has the worst trade deficits it's ever had. It was supposed to help them, remember? A 40% drop in the yen was supposed to give you a competitive market share. Didn't help them. Hasn't helped Europe. Not going to help anyone else. All it does is make things worse for everybody.
And Andy, the whole concept of debasing one's currency to gain competitive advantage, to expand your economy, to somehow drive economic growth is a shibboleth. Or for those who don't like that term, it's a myth, because at the same time, well, it might make your products, your services cheaper overseas. It drives up the cost of producing those products here at home, because the components that you need to produce products, i.e., let's just take an example of a Lexus, which Japanese seem to be very adept at producing. Well, the steel that goes into that car is going to become more expensive. The tires that go into that car, if it's imported from places overseas, and let's face it, Japan has very little natural resources of their own. Most of the goods that they produce, the raw materials come from overseas. So, of course, it's going to adversely affect economic growth. Strong currencies, on the other hand, well, let's go back to the U.S. during the 80s, during the Reagan eras, when interest rates were in the 20+%. The U.S. dollar was soaring. It was truly the currency, the king of all currencies. Gold prices through the cellar, precious metals prices. Standard of living really did increase during that time, and the U.S. economy boomed. So this myth that somehow you debase your currency and everything's going to work out fine really needs to be shattered once and for all. Countries need to stop manipulating currencies. If we're going to have fiat currencies, which we know they fail in any event, the only chance they have of working is allowing freely floating exchange rates so they find their own value and allow markets to function. But we know that's never going to happen. So What am I talking about?
No, you couldn't have hit it more on the head. I mean, I've been talking forever about the canard of the global final currency war, of this, of that lowering your currency improves manufacturing market share. Now, I've written of it in terms of that countries are doing it because they think that's going to happen. But the fact is, it doesn't work because, as you say, for one, if a company makes more profits because they've debased the currency, well, those profits are worth less. So the company hasn't made anything. The purchasing power of those profits hasn't gone up at all. And as for manufacturing market share, as you said, it does make your products cheaper to other things, but it also makes the cost of living in your country and the cost of importing things that go into those products more too. So there's an offset there. And, you could say whatever you want, not you, but people, about whether it's a good thing to do or not. But the fact is that the countries that have actively debased their currency for just that purpose have not experienced it. I mean, you really have to look. This is Japan. We all know Japan, the greatest, the miracle, the greatest economy, up until the 1990 that we had ever seen. And the point is, they had everlasting trade surpluses, which is why they've been able to get the people to buy all of their ridiculous bonds and have this ridiculous debt rate. But the fact is that since they started Abenomics, they've now had trade deficits for the first time in decades. And now they get worse every single month. So the point is, they are not gaining market share. They're not improving their economy, and they're not gaining jobs from it. And again, look at the euro. The euro, since they started talking it down, it's gone from 1.30 or 1.35. It's now 1.13. It was as low as 1.05. Today's numbers show there is not the slightest bit of impact on the European economy. But all the European people that have to buy things from overseas, and Europe is a net importing continent, their cost of living has exploded higher. And of course, the debts have exploded higher. And look at what's going on in Greece, and look at all the political movements to oust the leaders in France and Italy and Spain, to secede in Catalonia. This is what in actuality happens. But since they got this, they not only print the money, but they buy the stock market with it, they being the powers that be, the central banks. They have a high stock market. The 1% benefit from it, the bankers benefit from it, and the media can cheerfully write, look, the stock market's up, things are better. But with each passing day, it becomes more and more clear that the separation between economic reality and the stock markets, and bond markets for that matter, is that wide. And next I want to talk about the bond markets and what's going on in them, because we are seeing some major Teutonic or what's the word? Teutonic, the plates change. What is it called? What's that word?
Tectonic.
Yes. Is anyone watching the interest rates? Remember, the only reason that we have these bubbles in stock markets, these historically high valuations, to the point that Janet Yellen herself said this morning, stock prices are high. Not that she's going to do anything about it. It's really just like Greenspan saying there's irrational exuberance. But the only reason this has been enabled has been by QE to infinity and ZERP to infinity, keeping interest rates at nothing and printing and buying the stock market up and getting the media to say, well, stock markets are always valued higher when interest rates go down. It doesn't matter that it doesn't really improve the economy or the companies. But the fact is that rates have been rising. Did anyone see today's ADP employment report? Did anyone see yesterday's worst ever trade deficit explosion? How about the GDP report from last week, which is going to be revised dramatically downward after the trade deficit report? How about across the board what we're seeing? We've never seen months and months of negative retail sales, negative construction spending, durable goods, factory goods across the board. This is the reality of what's going on. And in it, we're watching rates surge. I haven't seen this in a long time. And again, I've been saying all along for years now, I said rates are going to be taken to historic lows because everyone's going to front run QE to infinity. They know the banks are the economy's going to get worse. They're going to keep printing money and buying bonds. But a strange thing is happening. Now rates are going up. They doubled in Germany in the last week, the 10-year yield, from low levels, but doubled. This is a big move, especially when you have a stock market at an all-time high. And the same with the 10-year here. It's up, after this horrible news this morning, the ADP employment, surging interest rates, surging yesterday. We're up to 222 from 180 a few months ago, from 160 a few months ago. And again, this is what will destroy any semblance of hope, any semblance that you can have a wealth effect by a higher stock market with rising rates, which is why it makes it so comical that anyone believes the Fed would raise rates, let alone with all this bad economic data. As the Fed is telling you, it's so bad. The higher rates go, the more terrified they're going to get, and the more likely they're going to be to initiate QE4.
Well, it's just a matter of time. We've always believed that it was going to happen eventually, Andy, and
didn't believe, knew.
Yeah, well, yeah, knew. Sure. And they're going to have to, because the dollar is just going to go too high, and you see it with the trade deficit, right? This
is the biggest jump in the trade deficit ever. And again, you can't. The two things to come out of this is, one, of that report is, if you take oil out, okay, because oil is so volatile, it goes up, it goes down, it was the worst ever. I think it was the worst trade deficit ex oil ever, meaning we are as big of an importer as you're going to find in the world. And this is with a central bank that has printed all this money and is going to keep printing it and devaluing our currency. I mean, look at oil, right? Oil's up to $62 a barrel now. Now, again, I've talked about the oil PPT for some time. There's not a doubt in my mind that, quote, they are in there right now supporting oil. But that said, there are some bigger forces at action here. I mean, we know that the Chinese, according to tick reports, have been selling treasuries. We also know that at some point, the market has to discount hyperinflation. They have to discount the fact that you can't have all-time high debt loads exploding higher and all-time low yields. It just doesn't make sense. So for whatever reason, you're seeing interest rates rise. You're seeing oil rise with record inventories, with demand flat at best. With all the, I mean, look at the shale. My God, there's all these thousands and thousands of uncompleted wells ready to come on the second that prices move up a second. And yet oil prices are rising. This is not going to be good for the economy. Remember, Janet Yellen said it was a net positive that oil prices go down. Well, guess what? Oil prices are up 50% since she said that. And the economic data before that happened was as bad as it's going to get. So again, the walls are closing in on these guys. And it just, what is going to be the thing that tips it? You're seeing stock markets now having trouble staying up now and interest rates rising. I mean, when have we seen this, Kerry? When have we seen it? I mean, in my life, I can't remember a time, maybe back when I was in a hedge fund, 15, 20 years ago, when you saw stocks go down and bonds go down as well, because, everyone's so used to believing that bonds are going to be monetized. Well, I'm looking at interest rates soaring today while the stock market goes down. Same thing yesterday. Things are changing. Tectonic changes are going on right now, and something is going to give soon.
Yeah, I think it's inevitable. We've known the day was coming for many years already. It's just getting closer, and it's just a matter of when, not if. That's for sure.
Yeah, and what is that catalyst? Or is it one catalyst? I don't know. I mean, we talk so much about Greece because it's right under our nose. And by the way, I mean, even the IMF, even the Eurogroup, they know that they're not going to make their payment. They made this little tiny payment today, but next, the 12th, what's that, Tuesday? Giant payment. Don't have the money. What's going to happen? Are they going to do a deal and take more austerity after these guys got elected to office? That's the only way it's going to happen, is if they do what the Greek people said not to do. And the European group, the Troika, whatever, they said they're not going to do it. So what's going to happen? But even if it's not Greece, it's going to be something. And what's that going to be? And it's like, how can people not be protecting themselves right now? How can people all be frogs in a pot watching what's happening to their own lives? Watching what's happening in financial markets if they're into what the financial markets are saying. What they're saying is that very, very ugly things are happening.
Yeah, that is for sure. And how they're keeping it all together, it's like a pressure cooker that's been used thousands of times before, and it's reached the end of its useful life, and they want to give it one more go round, and they're just praying that all the valves and the locks and everything hold up while they turn that stove up as hot as it can go, and they're all kind of hiding in the back of the kitchen, just keeping their fingers crossed that it doesn't blow up this one last time. And that's what I think our monetary system is like, Andy. It's just one of those creaky, rackety pressure cookers that just won't they won't put it to rest. They won't put it to bed.
Exactly. And this is what I have said all along, because there's a lot of people in our world who, they have lots of different views, and I think people want to have an explanation. They want to believe that there's a group of people, a couple of Americans, a couple of Brits, maybe a Japanese here and there, and holy cow, maybe even a Chinese, if you really want to be conspiratorial, all discussing what the next plan is, what they're going to do next. And I've said all along, no, the problem is fiat currency has created all these fiefdoms around the world. There's the Japanese powers, there's the European powers, there's the American powers. And of course, at times they collude, they meet with each other, they have their IMF meetings and all that kind of stuff. And if things are bad enough, they have conference calls and they say, oh, we got to make sure gold goes down and that the stock markets go up. But for the most part, they're just chickens with their heads cut off every single day, trying to maintain the status quo. This data says this, we have to offset it this way. That we have a crisis here, we have to calm it. I mean, that's what goes on. It's been going on for years and at an accelerating pace since 2008. And it's getting to the point where there's just too many. I mean, the holes are springing everywhere from the dike. I mean, they desperately want rates down, but rates are not going down. They desperately want oil, I don't know, down, up. First they wanted it up, now they want it down, and they can't get what they want. And at some point, the whole dam just breaks because there's too many people that are in debt. There's too many, there's too many economic oversupplies that can't be fixed. And there's too many markets that are way, way out of whack with reality. You just can't, if every fiat currency has failed, then every market manipulation scheme is going to fail. Yeah,
because when you get down to it, a fiat currency is just a market manipulation scheme. That's what it comes down to. Of course. And I mean, it's just decidedly failing. I mean, you think about all the people in these countries where their currencies have got crushed. And I think of the secular American view of, well, the dollar is, we're just frogs in a boiling pot. We don't even, my valedictorian mother doesn't realize that beef prices are at an all-time high. But think about what it's like. Let's say you live in Brazil. I mean, the currency is down. What is it, down 60% this year or something like that? The price of gold in Brazil is at an all-time high. Those people are really feeling the pain. Inflation and falling oil prices, since oil and by the way, iron ore, that's their other big export. Yeah. They're really feeling the pain. They got the drought on top of that, which is killing a lot of their agricultural business. That is, a worst case scenario going on as we speak. But Americans don't even realize that this is going on. We laugh at what's going on in Russia, not realizing that Russia needs to import a lot of stuff and their currency has crashed. In all these places around the world, and it's going on now. It's only a matter of time before the cancer creeps up the totem pole and strikes at the people at the top, which are going to be us. Yep, just a matter of time. And that's the problem. We don't know when. We only know it's coming. Andy, hey, no predictions as to when, because that's too much to ask anyone. Find Andy's work over at milesfranklin.com, along with his colleague, Bill Halter. Just keep pumping it out, Andy, along with your audio blog. Check out financialsurvivalnetwork.com. Been talking about the war on money. Andy, I covered that like over a year ago. How come everybody is so late to the party on this? I'd like to know. Yes. It was so obvious, and we talked about it extensively, you and I. Yes, I wrote about the war on money that cannot be won last week. Right. I mean, it's so freaking obvious. But anyways, things like that you find on Financial Survival Network. We've got literally hundreds and hundreds of articles that our webmaster, Stefan, is spending hours and hours a day bringing to you information that you need to know that you're not going to find on the mainstream media. So go check it out, financialsurvivalnetwork.com. Andy, next week. Looking forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.